All right, welcome to AI Explains ICT. Today, we are diving deep into a really powerful day trading model. It's all about how market sentiment, well, it's often a trap, a carefully constructed trap. And we're not just going to look at how this trap works. The real key here is figuring out how you can learn to spot it, and even better, use it to your advantage.
Okay, so what we're covering in this video is ICT's core content, month 9, episode 1. Seriously, you're going to want to grab a notepad for this one because this month is all about day trading. It is packed with actionable stuff, and we are jumping straight into the mechanics of some really high probability setups.
So let me ask you a question and be honest. Have you ever jumped into a trade that just looked perfect? You know, a textbook breakout, only to watch the market just immediately reverse and smack your stop loss? Yeah, it is so frustrating, and it happens all the time. Well, today, we're going to pull back the curtain and see exactly why that happens, and more importantly, how you can actually be on the other side of that move.
All right, so here's our game plan. First up, we're going to dissect that classic trader's trap. Then we'll look at the smart money compass, the tools they use to navigate. After that, we're getting into the nitty-gritty, how to fade a false move, and the exact rules for high probability buy and sell setups. And we'll finish up with what might be the most crucial piece of the puzzle, a trader's discipline.
Okay, let's kick things off with the trap itself. ICT has a name for this. He calls it the Judas swing. And what is that? It's that first move, that deceptive little jab that looks like a real breakout, but it's not. It's engineered for one reason and one reason only, to suck traders in on the wrong side of the market. So, at its heart, this is a story of two different mindsets. You've got street money. That's the crowd that chases price. They see a breakout, they buy. They see a breakdown, they sell. It's all reaction. But then you have smart money, and they play a totally different game. They're patient. They wait for that initial move to trap everybody else, and then they step in, going in the exact opposite direction.
So how do you navigate all this and start thinking like smart money? Well, you need a compass. And for this specific day trading model, ICT gives us just two, absolutely key instruments that we need to use to get our bearings every single day. First up is the Asian range. It's super simple, really. It's just the high and the low that's put in during the Asian trading session. The best way to think about it is, it's the initial playing field for the day. That high and that low, they become huge magnets and reference points once London and New York come online. And the second part of our compass? The opening price. Now, we've got to be specific here. ICT defines this as the price right at the New York midnight candle. That's 0000 GMT. This one price level, it's like a pivot for the entire day. Whether the price is trading above it or below it tells you a ton about what the market's likely trying to do. Okay, so now we have our compass, right? The Asian range and the opening price. Now we can get to the core strategy. And it's all about how smart money uses moves that happen outside of that initial range. This is the whole idea of fading the false move. And this image here, it just lays it all out perfectly. Look on the left. Price breaks the Asian range low. What happens? Everyone gets bearish, right? Street money sees a breakdown and they start hammering the sell button. But look, that's exactly where smart money is looking to buy. Now flip to the right side. Price smashes through the Asian range high. Bullish sentiment is through the roof. Street money is piling in, buying the breakout. And once again, that's precisely where smart money is looking to sell. This right here, this is the rule you have to tattoo on your brain. It feels completely backward compared to what most people learn, but it is the absolute foundation of this entire model. Think about it. Smart money is in the business of buying at a discount, that's below the low, and selling at a premium, that's above the high. All right, let's get down to brass tacks. What does a perfect A-plus, high probability buy setup actually look like? Well, there's a very clear step-by-step checklist we need to go through. Okay, here it is, the 4-step checklist. Number 1, the big picture. The daily or 4-hour chart has to be bullish. The overall order flow needs to be pointing up. Number 2, we need to see that Judas swing. Price has to drop below the midnight opening price and the Asian range low. Number 3, that drop can't just go anywhere. It needs to run into a key support level on the 15-minute chart, what ICT calls a discount array. Think of a bullish order block or a fair value gap. And number 4, this is so important, the reaction. We have to see price sharply reject that level and move higher. No hesitation. And check this out. Here's a picture-perfect example. You see the Asian range, right? Price takes a dive right below the low,
And where does it go? Straight into a bullish order block. That's our discount array. Now, at that very moment, if you look at a sentiment indicator, you'd see pessimism is at an extreme. This is where street money is panicking and selling. And then, bam, the reversal. A sharp, aggressive rally away from that level. That is the signature of this setup. Okay, so now let's just flip the whole thing on its head. Let's look at the mirror image, the rules for a high probability sell setup. The logic is the exact same, just in reverse. So, the checklist for selling is just the inverse. Number 1, higher time frame order flow has to be bearish. The big picture trend is down. Number 2, the Judas swing is a rally. Price has to pop above the midnight open and the Asian range high. Number 3, that rally has to run into a key resistance level, what we call a premium array, like a bearish order block. And finally, number 4, we're looking for that same kind of sharp, immediate rejection, but this time to the downside. And here we go, a sell-side example right here on the chart. You can see it clear as day. Price rallies just a little bit above that Asian range high, and where does it run to? A bearish order block. Now, if you could see the sentiment, it would be at an extreme high right there. That's peak optimism. That's straight money chasing the breakout. And that is the exact moment smart money hits the sell button, which leads to that massive drop. It's just textbook. So we've gone through all the mechanics, the rules, the charts, the whole shebang. But honestly, none of it, not a single bit of it, matters without the single most important ingredient, and that is discipline, patience. I want you to let this quote from ICT really sink in. He says, day trading is not everyday trading. The point of this whole model isn't to find a trade every single day. It's about developing the patience to sit on your hands and wait for only the absolute best A+ conditions to line up. Look, trying to force a trade every single day it's a recipe for blowing up your account. Why? Well, for one, the more you trade, the faster your next loss is coming. It's just statistics. Plus, you can get a few wins in a row and start thinking you're invincible, and then the market hits a dry spell where these setups just aren't there, and you get humbled real quick. ICT has a great term for this. He says to avoid becoming pip drunk, just chasing the action for the thrill of it. So at the end of the day, this whole framework, it's a filter. Its only job is to separate you from that reactive street money mindset and get you aligned with smart money. Your job is not to trade every day. Your job is to wait patiently for those few moments when everything lines up perfectly. And on all the other days, your job is to protect your capital. That's it. And that's a wrap on our breakdown of this powerful day trading model. Hey, if you found this video helpful, if it clarified some things for you, do us a huge favor and hit that like button. It really, really helps us out. And of course, if you want more deep dives just like this one, where we break down ICT's concepts into clear, simple steps, make sure you're subscribed to the channel so you don't miss the next one. You know, this stuff can get pretty dense, so if anything wasn't clear, or if you just have a question, drop it in the comments below. We actually have a human who reads all of them, and we will get back to you. Thanks so much for watching. Until next time, safe trading.